Okay, fantastic. Thank you, Aisha, for asking about that. You know what? I love that indicator. I mean, because it's so unique. Honestly, nobody's written an indicator like that. It's real time and it's pretty awesome. I'll show it to you later on. If I don't bring it back later on, then give me, make sure you shoot me a text or a message. Actually, let's start with the macro environment really quick, and then we'll get straight to the charts. I really want to do a deep dive today on the SPY. Now that I've been in Alvaro's Discord group, I've been more interested in trading the SPY. So it's been, I've been starting to dabble with trading the SPY rather than trading a bunch of different stocks. I do both. So let's take a look at the geopolitical environment right now. Obviously, we have, you know, the issue with Iran pushing the market to new lows. This that we're deploying troops over there. This is not surprising me. I've got the feelers out on this, and I believe that that's something that's going to end up happening, and hopefully we're not going to get entangled, you know, on the sidebar there. We're not going to get entangled into some long duration thing, but it's almost inevitable that troops are going to go be deployed, I think. And I'm not sure how the market's going to react to that. It's already had reactions to it. The question is it now normalizing that? This is the way the markets work. New information has shock value, and the markets move on that. And then once the shock is over, it adjusts to that, and then that becomes the new norm. I call it normalization. So is this shock value or is it normalization? I'm not sure yet, because I'm not sure that a lot of people actually really realize that that's where this is going. Once they're actually, maybe the day of deployment or something, we're going to see some type of volatility. Threats against the infrastructure, we've lost $2 trillion in market cap in the last 24 hours. We're really close to correction territory, and seasonally, this is actually, you know, one of the worst quarters, and especially during a presidential cycle, the average decline is about 2%. Markets are now pricing in a recession risk, and that's probably due to the inflation concerns. So these things have been kind of weighing on the market for a long time, but now this war catalyst has really overshadowed, and it's not, the war catalyst is actually caused the oil situation. This has all changed everything to be, basically it's all about oil, right? So it's about oil is what it all comes down to. We have Jolt's jobs opening 30 minutes after the open today, okay? So we want to pay attention to that. Should see some possible volatility at that time. Wednesday got retail sales and manufacturing data. That might give us a better indication about that recession risk. And then the markets are closed on Friday. So let's go ahead and we're going to dig into the charts. By the way, as I've mentioned before, if you have a certain chart that you want to see in particular, you know, type it into the chat, and I'll try to make sure I go over it. We're going to start here with the futures, and right now, you know, bonds. We're going to go to this area right here. Bonds are actually up, which means that interest rates are down. So what does that do? Well, that's actually pretty good, you know, for the stock market. So you see that across the board, and especially interest-sensitive Russell is actually up by 1.2%. And then you can see that oil is kind of flatlining, slightly green to slightly red, depending on which one you're in. And then when you go down here to, let's do this, let's just go ahead and make a new one. Go down here to the metals, the precious metals to begin with. Silver's got a really nice bounce from yesterday. Silver had a rough day yesterday, and it's bouncing back from that. Gold is up a 1%, and then the other metals are also up as well. They're all interest rate sensitive, so with oil going down and oil being the main driver here for interest rates, you know, that's how you read the market at this time. So, you know, when this goes up in regards to bonds, okay, then the market will go up with it, generally speaking. When this goes down, the market's going to go up, right? When this goes down, your metals and precious metals are all going to go up. So now, I like this look that we have right here with it on the 5-minute time frame. We'll just spend a little more time here and we'll get out of it. But you can see we got a jump, basically it's kind of in the post market, and now we've just been, really just been flatlining now across that. So basically we're putting in a bull flag at this time across the markets, and that's on the 5-minute time frame. But then if you go over to the hourly time frame, you can see that, you know, that's really just a relief rally. And if obviously we go to the daily, you know, this is all scoping down, and, you know, gold, even though it's been pulling back, and silver, you know, those actually look great. So it's your time frame, you know, that you got to pay attention to. In the 5-minute, things are starting to look bullish. In the hourly, it looks like we might be getting a bounce, but it's not going to overtake this high. At least at this stage, it doesn't look like it's ready to overtake the high. You're not going to start, usually you're not going to start all the way from the bottom to overtake the high. So just want to keep that in perspective as we're talking about this, because I do think that we're actually going to have I do think we're looking for some relief here to the stock market in the near term. These charts over here, we kind of went over them, except for Bitcoin. I didn't go over Bitcoin, so let's just look at that right now. This is it's a 4-hour chart, is what this is of all of these. Okay, so on Bitcoin right here, you know, you have obviously you got, it's kind of like, almost like a bear flag on the 4-hour chart, but it's actually showing up very well on the daily. So if you look at this, not the daily, I'm sorry, the hourly, that's what I meant. I'm going the other way. 15-minute then. Oh, okay. Well, then I'm, yeah, so you're seeing this little bounce here up on the 15-minute, which is what I was noticing when I was looking at, let's go to extended sectors. And so in your extended sectors, where's Bitcoin at? It's not in there. I don't have it in extended sectors. Okay, but in the futures, though, I do have it. Oh, so Bitcoin's, okay, typically it's been up about 1-2% in the pre-market. And yesterday it was up about 2%. So today it's kind of flatlining, which is interesting. And crude, if you just blink your eyes, crude will be all the way at the top and crude will be all the way at the bottom. So, and we got ourselves a little bit of divergence here that silver looks like it's giving back some gains right now in the pre-market. So that chart I just showed you with the FinViz is actually a little bit dated or a little late. I want to jump straight into the SPY. I want to talk about this. I want to get some levels. I want to point out some things that I've noticed about the SPY. So let's go ahead and take a look at this. I had this regression channel. We're going to work over here off of the daily chart right now. So let me go ahead and put an arrow right here. We're going to work off of this daily chart, but I have it set on a 24-hour time frame, and that's so that I can get the pre-market data in here as well. So let's go ahead and we'll maximize this window for just a second. There we go. And we'll maximize it. All right, so you guys, I think if you've been following me, you know that I got this regression channel drawn, and we hit this regression channel several times. We hit it here, 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 and here. All of those were excellent opportunities to make some money, but now it looks like we've got another, you know, a slope down. Whoops. Okay, let's do it like this. There we go. Okay. So it looks like we got actually this kind of a trend right here, and we've broken that downtrend right there. But we've also broken through the lowest resistance level that I had right here on that regression channel. So, you know, you'd either come back and draw another one like this as a parallel, or what you start to notice here is that you have a trend that's looking like this, but now it's broke, and it looks to me like the trend is actually like this. And that's really what I wanted to point out to you. So let's take a look at this. I actually saved my drawing so I could draw it with you. But I'm looking at, this is what I'm seeing right here. I'm seeing this, And yeah, that right there. And if you, let me activate this one. All right. I have to pull it away from my screen here a little bit there. There we go. So I'm going to activate it. Trend line 7. There we go. What you got there is you got a bearish falling wedge, or a bullish falling wedge, okay? And the bullish falling wedge is, it looks to me like I think we're going to be in like a deeper pattern. So what I'm actually thinking we might be looking at is we need to figure out like where's this slope going to be? Is it going to end up being like where it's at right there, or is it going to, you know, level out to something like this? But once we find this, we're going to duplicate that. We're going to bring it down here, and that's going to give us where that low is down on the bottom. So that's what I'm actually looking at right now. So if this is a bullish falling wedge, as I'm pointing out right here, it looks to me like you're going to. See, I did this backwards. You're going to do. I'm trying to get a number for you in regards to what is the projection if it breaks out of this right there. And there's your projections right there. So let's go ahead and let's add those numbers to that Fibonacci, okay? So we're gonna go ahead and we're gonna show, we'll go ahead and show the coefficient. Let's show it on the right. Show the coefficient and show the price, okay? So here's some numbers for you to mark out if we break out over that. The 61.8 takes you up to 646.97, which really brings you to the top of this breakdown candle right here. So I would say, I would just round that off to the 647 area, and I would pay attention to price as it gets back into that area. Now notice also that you're also in this area right here where you're now in the mid zone, which a lot of times the mid zone can act as a area of resistance and support. So as we run up into this mid zone, it wouldn't surprise me that that's an area where we're going to start to see some resistance. So that 647, we got the breakdown candle right here, which we can call a control bar a lot of times. And then we got the Fibonacci over here. And I just noticed that I still have a bunch of drawings on my chart, so I'll get rid of those. And then if we get an even stronger move, we're looking at getting up to as much as like 659, which is going to bring us into these moving averages. You know, so we're looking at the 20 moving average, you know, coming down, you know, about like this over the next couple of days. And then we're also looking at the 50 coming down here. You know, a lot of times when you get these moves up, it'll actually pierce that, as you can see, like right here, right? See where it pierced over the 20 period right here, right here, right here. But then because the 50 is sloping down, it's actually putting downward pressure on that. So I wouldn't be surprised to see it actually come up and pierce over. Come up, pierce over, maybe hit that number that we're talking about, and then we come down into our downward trend. So that's what I'm looking at on a longer time frame. I wanted to also show you this. We're gonna pull up the daily, but while we're sticking with the longer time frame, I wanted to show you what we're looking at in regards to the Elliott wave. So this is the Elliott wave pattern. And we're right now putting in the fourth wave of a 5-wave pattern according to this software. And so the pattern actually insinuates that we're looking at basically somewhere in this area. Usually it's between the 50 and the 60% area. Somewhere between 600, right around 600 is where I would expect that we should be able to get a final bottom to this market. So right now I am looking at us probably getting a recovery, but I wouldn't stay long. I wouldn't stay long. if you're swinging it, you swing it for a day or two. Personally, I would not want to swing long on the market right now. I would prefer to actually swing short if I was swinging anything. But honestly, this is such a volatile market that I think it's perfect market for day trading, and let's wait until that bottom comes in. We're looking for a capitulation event, you know, to put that bottom in. This is not a capitulation chart right now. The chart is actually moving very controlled this way. We only got a slight capitulation yesterday, but then it shot right back up. So we didn't get much out of that at all. So let's go ahead and let's go to the hourly chart and let's grab some pivots. All right. So on the hourly chart, you got your pivot lows here. You're looking at 629, 629.5, that zone right there. And you could even take it up into 630. Like a lot of times people will actually draw it out as a zone. That actually has put in a double bottom as we speak right now. As long as we don't move too far into the upside in the pre-market, I think we'll be good to go with that. And then I'd love to see the market pull back a little bit going into the open. And I'm going to show you why I would prefer that, because I want to actually look for the long side on this on the day trade today. So there's your levels. You got to the upside, it's 641.45. We're putting in a consolidation range right between 640 and 635. 635 looks like the bottom of that consolidation range. And then you have 644.50 as the next area after 641.50. Let's go over to the 15-minute chart and really dive in deep on this, okay? So right now, I'm showing you the 15-minute chart, as you can see right here, okay? And we're digging into these numbers. Now, the numbers are the same, you know, for what we had on the hourly chart, but now we're actually getting the specific numbers on those, on the 15-minute chart. I don't have to draw these in. These are drawn in for me by my indicator that I wrote. And once again, I'm going to make these available to the community, and I'm going to actually post that today with a discount code for you guys. So these automatically draw, so I don't mess my charts up, and I don't have to constantly draw my charts every single day. And you can see now, right now, the market is moving right now. It's 818. The market's actually moving a little bit up, and it'll probably still continue to kind of highlight in that resistance zone. Let's go ahead and let's put on the, let's highlight the trading session here. So what we're looking at right now, so what I want to show you is this. This is your balance range for the pre-market right now, okay? And right now you are trading in the upper balance range of this pre-market. Right around here is the middle of the balance range. So that means that everybody, or most of the pre-market, is now net long. So what that means is that if the price ends up going underneath, say for example, let's do this. Say, for example, we got this right here. If the market begins to move underneath of this right here, the initial play is actually to the downside. You're looking at coming down into the middle. Right around here would probably be your point, that your first point of opportunity is around the 632 area, or does it even come all the way down? Let me erase some of these things now. Does it come all the way down? So it comes, your first move's down here, right? 635. Maybe you have a move there, and then if it even goes a little further, you have this area right here where you could possibly get support. Now, I'm thinking that we're due for a relief rally, and it wouldn't surprise me to see something like that, especially now because we're in this, we have out of balance to the high side. Now, if you look, just to kind of put this in perspective, let's look yesterday just so you can see what I was seeing yesterday, because it was the same thing yesterday, only it was a beautiful setup. This was your balance range, and the middle of the balance range was right about here. And look where we opened. We opened right here. We opened right at the very top of that balance range. But on top of that, we had a really beautiful trend line that you could have worked off of right here. And so when it broke that trend line, you could have got yourself a pretty fast scalp down. And then also, once it broke that trend line, it actually kind of set the tone then for the rest of the day as being down. I don't think we're going to see that today, though. It didn't surprise me to see it yesterday, even though I'm calling for a recovery on that. That's about what I have now for the SPY. So do you guys have anything else that you want me to look at on the SPY? I gave you your levels. I think we're good to go with that. So we got AMD, Microsoft, and Google. Microsoft and Google. I'll do them in order. So let's see. The first person was... Happy Tuesday, guys. All right, first person was Meta. Yeah, Meta's having some nice recovery right now, so let's take a look at it. And since you guys were asking, look over here on this chart right here, and I'm going to post this in the Discord, but the RTY is up. And why is the RTY up? Because interest rates are down, so your small caps are actually enjoying the most upside to that. If we go over to the sectors, the semis are up, the technology's up, basically your risk on is all up. On the bottom of the chart, it's risk off, and XLE being on the bottom of the chart is favorable to the chart, to the charts. And then if you look here, it's interesting. You got a divergence of silver. Silver is actually up in the ETF, and if you look up here. The silver on the futures is actually down almost 3%. I find it interesting. Silver seems to diverge like that quite often, so you might want to put silver on your list to see if it can actually hold that up there. It looks to me like if it breaks down through that, you have the upper balance range on top of that, but also because of that divergence with the futures, it actually could put a little bit of pressure onto the downside. At least that's what I've noticed. It's the only explanation I got for it. But all of your commodities, they're up right now. So even a pullback on silver, you definitely don't want to buy up here. You'd want to at least wait for the pullback that I think is almost inevitable. Maybe on all of these, the pullback is inevitable. When I say pullback, I'm not talking pullback. I'm just talking about a relief, but then possibly going higher today, because I think USO, I think crude oil, I think we're going to have, the market's just looking for a reason. It's looking for a reason to bounce. Okay, so whatever gets out there in the internet that says, oh, this thing is almost over, or the straits are all going to open and oil's going to flow freely, it's going to grab onto that, even if the possibility of that isn't even that true. Okay, let's go to the Mag 7. Leading the way for the Mag 7 is NVIDIA. I got to talk about NVIDIA before we get started. You guys, I told everybody, and I posted this, man, you can go back to my Twitter, you can see this very, very long time ago. We hit 205 over here, we broke down, and then we spent all these days going back and forth, and I finally posted, like, it's done, it's done. We will see 165 before we see 205. No, I'm sorry, we hit the high here, and then over here, when we couldn't make that, I posted we'll see 165 before we see 205. I said 205 because that's the number that we had right there. I was like, we're not going back to revisit it. It's done. It's over. And that came in after the earnings, actually. And lo and behold, there we go. We hit 165. And while I'm talking about NVIDIA, I want to go ahead and I want to bring this up. I want to show you guys that NVIDIA is actually in a 5-wave down. So be careful with NVIDIA. Everybody keeps talking about how the forward earnings and everything else, it's great, now's the time to get in. But You know, these Elliott waves are just like any other indicator. They're not always 100% accurate. But I do believe that you're looking at NVIDIA kind of falling into this range right here. It's putting in the third wave down right now. This green color right here means that it doesn't believe that it's actually met its criteria to go all the way down to the third wave. What's fascinating is that according to Elliott, the prior 5-wave up, you see the 5-wave up? If you look over here on this prior 5-wave up, look at this wave 4 right here that we're put in at. Elliott, one of the things that Elliott talks about, he says after you reach your 5th wave, most of the time you will come back and you will retest that 4th wave. And look what we did. We came back to retest the 4th wave. This is the reason why people follow the Elliott waves. It is kind of crazy how these things can actually almost seem to come true. It wouldn't surprise me to see it fall back, even at least, you know, maybe into this range right here, where we have some, you know, what's that running about? 155, 150. Wouldn't surprise me to see it get down around there. And then that's probably your 3rd wave down. And as you can see, a lot of times on this one we got a nice 5-wave pop, but sometimes the 5-wave is just barely over top of it. So there's the long-term view for NVIDIA. The short-term view, maybe it's going to have some bounce to it because, you know, it actually got hit up pretty hard yesterday. Let's go ahead and go to Meta per the request. And Meta, for some reason, is not on my list for the Mag 7. Sometimes that happens with Thinkorswim. So Meta is up 1.5% today. In this dashboard here, you can see it's actually positive price action in all the time frames up to the 4-hour time frame. The daily and the weekly are still down, so you don't overstay your welcome, but you can look for pullbacks today on a day trade, and as long as this price action remains strong, you're probably looking at a winning trade. Just want to watch your entries. Let's go over here to the daily chart, and then we'll drill down. So on the daily chart, we broke, you know, the 170 low, and it was in a kind of a sideways regression channel, and it actually broke that. And so now I'm actually going to pull one this way now, just because sometimes it's actually, you know, I like these regression channels. I think like short-term daily, this is what you're looking at right there. Yeah, that's good enough. So short-term daily, that's what you're looking at. And so, yeah, we got to bounce. We're up into the middle of the regression channel. I think that you're gonna be hard-pressed to get over that 171. 171 area, 172, you're hitting the bottom of the prior regression channel. You're hitting resistance. And you're actually in what's looking to be like the new regression channel. This is what you want to see for us to know we hit the bottom. We want to see that steeper slope down. So that's what we're actually looking for. Let's go over to the hourly. On the hourly, it looks like it's already made its move. You don't have a lot of upside, but yeah, let's just go over 15-minute. And I'm actually going to turn off the, we know that the pre-market is in there, okay? But I'm going to turn it off because I think it actually disrupts your view. So it's putting in a bull flag in the pre-market is what we're looking at, right? So here's your bull flag right here. And right here. And it looks like, I don't like these elongated bull flags, but it's the pre-market, so, you know, it does that. And it looks like it actually already did this, and it came back and it retested it. Now we're trying to take out this high right here. And that high is 168.19. So if it takes out that high, 168.19, then you're looking for it to hold this 167.50. You could put a stop loss right there at 167, and we might even be able to run all the way up to 169.5 right here. So there's your levels. On a breakdown, if we break under this 20-period moving average, break under 167, your dynamic support is 166. And then you got 165 price at 165 as the as the other one. Let's see what we got here. We had Meta, Microsoft. We're doing pretty good on time. It's 8:30. Huh. You know what? I think I'll start doing these at 8 o'clock. It's a lot more relaxed. I'm going to end at 8:45 to give you guys a chance to actually get ready for the pre-market. Ah, I had the wrong one on. I apologize. Let's go to Meta. Let's go to the daily. Oh my God. Okay, this makes more sense. Okay. So now, as long as we got this snapback low, I'm going to go ahead and go over this as well. But this is what I was talking about. This is what I'm looking for the SPY to do, actually, right? This now is a new regression channel, right? Starting from about right here, right? Right? You can even take it to there. To there. And as you get the information, you would redraw it. If it continues to go up, which it wouldn't surprise me that it actually maybe might go up to this move right here, then you do that. When you see these lines like this, for me, magenta lines, those are actually my predictions about where it's going to go. I saw an ABC pattern. I saw an ABC pattern right here, if you look. Here was your top, your A. There's your A move, there's your B move, and I was wondering where does the C actually end up at, and so it actually went beyond where I thought, and it had this terrible mess right here, this terrible mess right here before it actually did anything. So, but if you look at this, let's just see what the next level is. I always find this fascinating. Okay, it didn't quite make it to the 161.8, but it doesn't mean that we won't get there. It doesn't mean, in other words, it doesn't mean that C move is done. It's a possibility it could actually go all the way down here to 483, which if you're looking at this regression channel right here, if it hit the bottom of this regression channel with time, wouldn't surprise me that it hits that, and then that's the bottom of the move. We'll leave that on there actually just because of that. So let's then go over to the hourly chart and take a look at it. On the hourly chart, oh wait, I didn't talk about the snapback. We'll go back to the daily. All right, so this snapback indicator that I wrote right here, it put in a low right here for the for Meta. You can see it put in a high, a snapback up here where it actually marked out the high. Usually, if you don't make it over the high or don't make it over under the low, it's pretty strong that that's actually going to be a place you can trade off of, and it's definitely it's actually moved so far out of orbit that there's a reason why it stopped down there. If you go and you double click the indicator itself, and if you show all of them, you can see that we actually put in a snapback high on this candle right here, and then we tried to get over it and we couldn't get over and put in a second snapback high. If you had seen that on your daily chart, that would have been a nice entry. On this one, we went over. So you see this, we had a reaction and we went down. We had a reaction here, we went down. You could have got a nice little scalp off of it. It doesn't look like much, but on a daily chart, but on an hourly or 15-minute chart, that's making money. But the real money gets made when you actually come over and you actually close over that, because then it's telling you it has strength and that seller's been taken out. And when that seller's been taken out, look what it did, it went all the way up. Once again, the buyer here, on this level right here, you got a little bit of a bounce, so you could have played that actually for some positive gain. But once it got under that, you got to get out. And we got a double bottom right here. And as you put more of these, you stack more of these together, it actually becomes even stronger. Now, if you're in a downtrend and you get snapbacks on the low, they're less trustworthy than the snapbacks that you get to the high. If you're in an uptrend and you get high snapbacks, for example, we were in an uptrend here and we get a high snapback, that's a pretty strong indicator that it's actually going to actually have a reaction. See here? We're in this downtrend. We got the snapback low, snapback low. Look at this low right here that it marked out for you. And if you really wanted to trade long term, look at the long term that you get off of this. Look at the long term that you get off of that. So I always only set it for the most recent one. And when you get this, if you decide to purchase this, you'll have it set to the last one. But I actually like to go and look at all of them so I can look and see how the indicator is working with that particular stock. And then I can make an assessment. It's sort of like a way that you can back test with it. So let's go over to the hourly chart now. I don't think that we touched on that. And so your bottom level is 518. It's sitting right here on a pivot right here. It looks like it's trying to take this, and this is something that you want to see. You don't want to see something like just run right into it all the way from here to try to then overtake it. What you want to see is exactly what's going on right here, which is, it's consolidating. It's actually doing this kind of thing right underneath of this resistance level right here. That's something that you want to see. So that's good if you want to trade this to the long side, because you got yourself a nice little consolidation box right here. And then you're looking at, if we could actually make an upside move, we should probably maybe be able to get at least to this level right here. So that should take you to about there. So what are those numbers? Well, that number right there is 553. It doesn't look like much on the hourly chart, but you're talking about almost 10 points. And if you go to my fib level, which surprisingly, look at this fib level right here, how it actually turned into, because the algos are trading these things. It was support, became resistance, and then they lost the resistance. And then here it even almost kind of had a near back test right there. So these levels are pretty strong levels. I would actually also pay attention then to this level right here. Pay attention to that wick right there, actually. Pay attention to the wick, which is also 555. It cuts up into that area. You might start looking then to actually look for a short. In the long term, Meta is a short. Right now, it's possibly a dead cat bounce. Going to Microsoft. Man, Microsoft has, it looks to me like Microsoft has put in an ABC pattern. Right off the bat, I'm seeing an ABC pattern, you know. Let's go ahead and draw it in. So you got, here's your A leg, here's your B leg, there's your C leg. Is that the end of it? I don't know. Let's pull a fib and see. Let's pull a fib and see if it could be the end of it, right? So there's your A, there's your B. And look at that. Oh my God, it always amazes me. There it is. Now, and Microsoft's already gotten chewed up pretty darn hard, okay? It's on the bottom of its new regression channel, which is coming up out of it. It wouldn't surprise me, we could take this regression channel off. It wouldn't surprise me to see this actually move up and retest the bottom of that regression channel and then come down and then retest the bottom of the new regression channel it's coming out of. Microsoft also, let's take a look in the longer term on that in regards to the Elliott wave. I think Microsoft's in a 5-wave down. It sure is, yeah. And in fact, they're predicting the time and price box is predicting by July we should be somewhere down around the 300 range. So you know, right now it says that it possibly could have already put in the 5. You see here how the 5 is not green. Remember on Meta, I think Meta, or no, it was on the SPY. On the SPY it was green on the 4th wave down. It's not green, it's showing that this actually could be the low. But you know, to fulfill the Fibonacci extension that you usually get, which I showed you was usually somewhere between 50 and 61.8, you would be somewhere around that 300 range. So it's good to keep that in mind. But it's also good to keep in mind that it's a possibility Microsoft's actually put in the low. I don't think so. Let me put it this way. Let's watch the price action, okay? It possibly could get down to here. So my Yeah, my fib is actually saying 311, which kind of aligns with the tap box. Not saying it's going to, but I'm also thinking to myself that we're probably due for one more really bad catastrophic type of news situation that's going to come up. Market's going to react badly to it for 1 or 2 days, and then probably that'll be the end of this, and we'll go into normalization. But that's just my guesswork. I got to play price action every single day. The only thing that matters, price is truth. All right? So you're in a consolidation range right now with Microsoft. As you can see, we're at the top of that consolidation range. This is exactly what you want to see right here, where it's actually continuing to kind of like stay in above this top part right here. This is not the balance range that I talk about. I talk about that on a 15-minute chart. So we'll take a look at the 15-minute, but your pivots are right now, it's at the top of that one. It pivots 365. If it pulls down that 365, you should really try to actually get long on this probably. You want to see it hold. Usually wants to come back and do a retest. Okay, and here's your entry right there. Or I'll sometimes actually get in just a little bit sooner than that if it's showing me some strong candles. As long as it's showing me it held this, and I know where my stop loss is at. So on a daily, your stop loss is down here underneath of this resistance right there, right? Terrible drawings, by the way. So, but what can I say? At least I give you an idea. If you lose this, if you spike through, lose it, you're coming down, right? Once again, this is also, you know, in the balance range. So if we look on this 15-minute chart, I guess I will leave it on the, I'm going to go ahead and leave the highlight the extended hours just so we can see that. But you can see that we're, the balance range right now for Microsoft, it's way over balanced right now. The balance range is right here. It's basically got all of these people that are long right here. And honestly, it's got a nice trend line right there. I might put this one on for a looking at it like this, like that, like this, like that for a short-term scalp out the open. But I think once again, I'm looking at all of these thinking that we're looking at a dead cat bounce for the next day or two. Going to Google. And I am just dying to get in Google on a long term, if I can even trade long term, because I can't. But I'm going to try. I'm going to try. I am somebody who loves to get in, get out. Even on my swing trades, they generally don't last longer than 3 weeks. So Google, you can see I pulled a Fibonacci on Google, got an ABC correction that I was looking at. And it has not met the full measure of that correction. It's only come down to about the halfway point. Wouldn't surprise me to see Google come back into this area here, which is it looks like it's about 284, and then you got a pivot right here that's 288. I have I drew myself a little downward channel out of this is what I got. This was a terrible capitulation event that they had on that. And if you look at this, let's pull another Fibonacci. Let's pull a retracement just off of that move. A retracement off of that move really takes you, it takes you right back into this area right here. So generally speaking, this, that 290 range is, it's probably an area where Google's just going to really struggle. You got all of those moving averages coming down. You got the middle of this zone here. You got the moving averages coming down. It's underneath of the 10-day moving average. It's barely just captured the 5. So that's what's going on there with Google on the daily chart. But if you look on the, let's just go straight over to the 15-minute, and we'll go ahead and we'll zoom it out. So you can see on the long term, on the hourly, it's still on the bottom part of that range, but it's also put in a snapback low on the daily. It's overtaken the snapback high. When it overtakes a snapback high, then what you're going to take that your indicator, you're going to call it a strength indicator. Then it's not a snapback; it's a strength indicator. So that's your strength, and it's marked off a pivot, and it's marked it off as being a place where price ran up into it, and there was a seller there, and he sold, and he sold, and he sold, and he sold, and he's got used up now, and now it's actually overtaking that area. So Honestly, you could probably even take this on a long right now if we weren't, if you wanted to actually scalp it right before the open. I would close it before the open because I think you're also looking at this kind of situation right here with Google. And I'm going to mark these off, and I'm going to set for myself, let me do this because I'm on the edge of my screen here, there. I'm going to set for myself an alert. This is how you do it. You can right click on a trend line. I don't know if you know this or not, but I do this all the time. I set a bunch of alerts. I'm going to have a bunch of alerts on this, and it's probably going to be firing off all over the place. I have if you look on this sidebar over here, I have Message Center opened in the sidebar. If you want to have Message Center, you just click this plus icon. You open up Message Center right here, and then you can have it in your list. So Message Center is up there for me, and I will have this thing open, and it will be giving me alerts. All right, we're pretty much done. I wanted to give you guys where you can go to get my indicators if you decide that you want to get them. I'm going to post this online or in the Discord as well. So you can go over to my website on stockchartistry.com. And by the way, I haven't been doing a very good job of like adding in my blogs and stuff like that, but I'm going to get up to speed on that. I had to spend a lot of time getting this product, getting the web store open. But here's the web store right here. You can click on the products right here, and it'll take you to the web store, and it'll show you all the products that I have out there. I got 2 more right now that I'm working on to make, to put into the web store, but I'm still doing some final testing on them and some back testing. Here, for example, is your Snapback Pro. If you go to read more on, for example, the Snapback Pro or any of the indicators, you have an explanation, a brief explanation what it is. You have a video that shows you how to actually use the indicator, and it even shows, a lot of times I'm even showing you trade-wise how to trade with it. And then if you want to dig into all the details of it, here's the details right here for you to dig into it. So that's how you do it. If you want to install it, here's the directions to install it. It's as easy as 1, 2, 3, 4, 5. Very easy to install. And lastly, if you want to purchase it, you just click here on purchase. So I thank you guys. It's been good. We're going to go ahead and close. Make lots of money. Shoot me a message if you made some money off of this early pullback. I am thinking, it doesn't necessarily have to do this. We could just rip right out. We can rip and run, right? We could gap and go, right? But I'm thinking that we have a small pullback off the open, but that's an opportunity to buy the dip probably. But also, if you're really fast in and out, I think you could actually scalp that open. So in the first, say 5 to 7 minutes, maybe between 7 and 15 minutes, maybe 7 and 30 minutes, we're looking for a bounce. That's what I'm looking for. Doesn't have to do that. We could actually we could drop lower and then bounce and then drop lower again. So just play the price action. Come in with some ideas. That's what I do. I come in with ideas, but I'm ready to throw the ideas out the window. The second price action has proven me wrong, and that's the way you got to do it. You got to be a flim flam. You got to be a fly by night. Don't stick to your laurels if the price action's telling you you're wrong. Guys, have a great day. Talk to you later.